While the world tracked rising prices on milk and gasoline, the collective net worth of the world's 10 richest people increased by over $200 billion in the last year. This is not a coincidence, it is a feature of the modern economy. For the ultra-wealthy, inflation is not just a challenge, it is a strategic landscape. Inflation is the rate at which money loses its purchasing power. For most, it means household budgets get tighter. For the world of luxury, it means something else entirely. As of early 2025, inflation in advanced economies has moderated to around 3%. Yet, the assets that define a billionaire's life have their own economy. The price of a new 80-meter superyacht has risen by over 15% since 2022. The art market is no different. A blue-chip painting is not just art, it is a store of value, insulated from the currency in your pocket. Billionaires do not experience inflation through a consumer lens. They experience it through an owner's lens. Their wealth is not in cash, which loses value. It is in assets, which often gain value. This is asset inflation. Think of stocks, private companies, and real estate. These holdings can rise faster than consumer prices. They also use leverage. A billionaire might borrow $50 million at a fixed 4% interest rate to acquire a commercial property. If inflation runs at 5%, the real value of their debt shrinks each year. Their companies also possess pricing power. A luxury brand can increase the price of a handbag by 10% to cover rising costs. Their clientele absorbs it. The brand's value and its owner's net worth are protected. Bernard Arnault, the chairman of LVMH, commands an empire of 75 luxury brands. His net worth stands at approximately $235 billion. His primary hedge against inflation is LVMH itself. Brands like Louis Vuitton, Tiffany & Co., and Dior have such strong demand that they can raise prices consistently without losing customers. In early 2025, LVMH demonstrated this power with an average price increase of 7% across its fashion and leather goods division, directly boosting revenue in an inflationary climate. Elon Musk's fortune, estimated at $205 billion, is tied to innovation. His assets are concentrated in high-growth technology stocks like Tesla and the private valuation of SpaceX. While volatile, these are bets on future productivity, a classic long-term inflation hedge. More tactically, his companies manage massive cash reserves. As interest rates rose to fight inflation, Tesla's balance sheet showed over $29 billion in cash and short-term treasury bills, earning significant yield as of its last reporting. This transforms idle cash from a liability into an income-generating asset. Jeff Bezos, with a net worth of around $198 billion, is diversifying his wealth beyond Amazon. A key strategy is investing in tangible assets that hold value. His real estate portfolio is a prime example. Beyond his headline-grabbing homes, his family office, Bezos Expeditions, has strategically acquired large tracts of land. In late 2024, the firm purchased over 10,000 hectares of agricultural land in West Texas, a classic real asset that serves as a powerful hedge against currency devaluation. Inflation's touch extends deep into the operational reality of the luxury lifestyle. The cost of ownership is rising. Annual wages for experienced superyacht captains have increased by an average of 10% since 2023, now often exceeding 200,000 euros. The price for JIT A1 fuel at private terminals like Teterboro or Farnborough is up 15% year over year. Even maintaining these assets costs more. The price for a standard 5-year refit for a 60-meter superyacht has inflated by nearly 20% since the early 2020s, driven by specialty materials and labor. This dynamic is not permanent. A sharp cut in interest rates by central banks could make borrowing cheaper, but might also signal economic weakness, affecting asset prices. A significant strengthening of the US dollar would increase the purchasing power of those who hold it, but it makes American assets more expensive for global buyers. Meanwhile, new markets create new pressures. Luxury spending in the Middle East is projected to grow by 12% in 2025 alone, driving demand and prices for the most exclusive goods. So, how does inflation affect billionaires? It changes the terrain, but not the game. For those who own the factories, the brands, and the platforms, a general rise in prices is often reflected as a rise in the value of their holdings. Their wealth is not just protected from inflation, in many cases, it is powered by it. The very forces that erode savings for the many can expand fortunes for the few.